This is Rob Barnett, and I'd like to welcome you to today's BI Energy Exchange, where we talk about our research and the latest developments in energy markets. On the call today, we've got Patricio Alvarez joining from London, and we've got Talon Custer joining from New Jersey. Today, we've got a special topic carved out. We've got two of our gas experts here on the call, and we're specifically wanting to talk about LNG and what the outlook could look like in 2024 and beyond. Just a very quick advertisement. Our colleagues, Sally Omaz and Fernando Valle, who normally join us on this call, are on a marketing trip in the Middle East right now, holding lots of client meetings and events. If you are in that region and you'd like to meet them in person, just ping myself or anyone on this call, and we're happy to connect you to them so you can potentially say hello. I would also flag that the week after next, on Tuesday, February 13th, we have an in-person roundtable scheduled to take place in Miami. So if you're either based there or fancy a little bit of warm weather, come and join us. Again, reach out to any of us and we're happy to get you the details. So on to the topic at hand for today. You've probably all seen the headlines about US President Joe Biden pausing the permitting approval process for new LNG export terminals about a week or so ago. And so I think let's start there and let's go to Talon first. What do you make of the decision? Is this just politics, and what's the readout on this change in US policy?
Yeah, it was a political move. It's appeasing climate activists on that side. So I think it gets extended to the election. And it could go a couple different ways. Obviously, the outcome of the election could have, a large impact. If a Republican nominee were to be elected, I would imagine the moratorium gets reversed immediately. If Biden gets reelected, I don't think an outright, stoppage of LNG approvals is in the cards right now. It just doesn't make sense. I think it would be more of a lengthy delay in these approvals. I think they'll look for some sort of compromise where they can strengthen some of the climate emissions criteria while also allowing some good projects to move forward. I think, a couple things to take away. Number one, it doesn't affect, current US LNG operations. It doesn't affect growth through 2028, essentially. And just the projects under construction, we see US LNG exports growing at an average rate of about 11% a year through 2029. So a lot of growth ahead, but it's a matter of looking at the specific projects, just to highlight a few of them: Venture Global CP2, Commonwealth LNG, Energy Transfers Lake Charles. Those are more at risk. They don't have the approvals that they're delaying, which are from the Department of Energy. They're licenses to export LNG to countries that don't have free trade agreements with the U.S. Right? So you're delaying those. They would need those to move forward. Cheniere has a couple projects: mid-scale train, Corpus Christi mid-scale trains 8 to 9, Sabine Pass stage 5. We actually thought trains 8 and 9 were going to be good, strong FID candidate by the end of the year. We thought they could get their FERC certification, other things, and possibly move on. It's a very small project, but I don't think that's in the cards now. Pushed back to 2025 at the earliest. And then, one more point before I pass it back over to you guys. It adds uncertainty to projects that have those licenses and approvals because of the pandemic and delays over time. Those licenses expire for a lot of projects within the next couple of years. So, at this stage, Sempra's Cameron Train 4, we, view that as a top candidate for FID this year if they were able to firm up some contracts. But they may push it into next year because their license expires in May of 2026. They're not going to start exports before then. So they would want some clarity on, an extension. They don't want to spend billions of dollars, start constructing that project. So they may push that back to next year, that decision.
Okay, thank you, Talon. A very fascinating context. Let's come over to Patricio. Patricio, I saw a number of headlines on the terminal after the Biden administration's decision, talking about particularly in Asia, LNG buyers scrambling to find new suppliers. But I'm curious, is the dynamic the same in Europe? Does Europe need US LNG, and how important is the flow of gas from US to Europe in terms of making the European market balance?
Yeah, sure. So I think short answer is we definitely need US LNG. Although we can say that we just run the numbers similar to sort of actually contradicting Talon's view on supply. LNG is going to grow 11% a year. We see European gas demand actually declining by about 2% a year through the end of the decade. But that said, this move of canceling the approvals or the moratorium on the approvals draws uncertainty over the size of the global LNG pool. So in that sense, indirectly, it will affect our ability to attract LNG, at least at the same levels that we've been importing in 2022 and 2023, which have made the U.S. the single largest supplier of gas after Norway. Norway pipes the gas. The U.S. is the largest source of LNG for Europe. So from that standpoint, it definitely narrows the pool for future imports. And without, obviously, it may open the door for other regions to export LNG into Europe, although we see limited upside from that aspect. And I think the other thing to consider, or that I think is important to mention, is that long-term contracting activity in Europe remains relatively weak. So it is the Asian markets that are sort of faster in reacting and into signing these long-term contracts, because they don't have these stringent emission policies like the Repower EU, for example, that makes it really hard for a utility to sign a 10-year contract with an LNG supplier. You know, you need to draw down gas demand by almost 20% by the end of the decade. So.
Yeah, maybe to follow up there, I saw that in Spain, there was a headline just yesterday that said that uptake of renewables in Spain is basically helping to keep LNG demand in check. And I'm curious, Europe seems very focused on wind, solar, hydrogen, things like that, and gas seems to get downplayed quite a bit. So can these technologies really kind of halt the rise of gas demand? And is that the reason that you're seeing that kind of 2% annual decline that you described in Europe?
So yeah, there's many moving parts to that sort of long-term figure. So wind and solar and renewables in general will help curb gas demand over the long run. But I think it's important to caveat that with the fact that Europe is mainly focused on phasing out coal. So when we talk about renewable output, sort of displacing fossil fuels, the first order of magnitude, or the first slot, will be for coal. They need to displace coal first. And from that standpoint, I think, gas is sort of still seen as a bridge fuel. It emits half as much as coal, so it is not smart to think that we should just phase out gas at the same time, especially because the sort of the options to convert gas into green hydrogen, gas-fired plants, for example, that is still in a very nascent stage, in a very early stage, and so that would sort of draw down the alternatives for Europe to draw on flexible generation. Renewables are great, but they are intermittent, and I know that everyone knows that. So you will need that flexible sort of response in generation, and gas is still, it's still more economical and less dirty than coal. And so far, we don't have a really feasible alternative in the cards so far yet. So I think it will still remain an important pillar of the power stack through the end of the decade.
Talon, I want to swing back around to you, kind of hearing what Patricio just shared. What's your sense? Can the U.S. retain its top spot as the world's largest LNG exporter, given the Biden administration's decision? And I'm curious just to kind of hear your view on how the US market balances out, because you could, in theory, imagine a world where maybe you have less LNG, but you take all of the chemicals and fertilizer production that currently is done in Europe and just do it in North America and ship those end products. So, you know, there is a little bit of a calculus of kind of where LNG fits and kind of where you build up these centers of gas demand. So, you know, and maybe all of the above happens, but kind of will US retain the, you know, top spot for LNG, and kind of what do you make of like the non-LNG portion of US gas demand? Are we going to see more industrialization that uses gas in the US?
Yeah, and just to clarify earlier comments, if I didn't specify, that 11% average is just the US. It's not global supply growth for LNG, right? So to answer the first question, yeah, I don't think anyone's coming close to US LNG for a while. Qatar will be second, even with their massive build out of Northfield East and probably Northfield South. They'll still trail the US by a lot. They're going to U.S. may be exporting over 170 million tons a year by 2029. So don't think anyone's approaching them by the end of the decade. The other question is an interesting one. We see lower industrial gas demand in Europe, right? And we see demand rising in the U.S. I see that increasing, right? But I still believe that it's LNG, right? That these projects, they sign contracts. A lot of them are Asian companies, and a lot of them are, big oil companies where, they're the middleman, they're aggregators, they're going to buy it and then sell it to the highest market, like Total Energies and BP and Exxon. So they have these contracts. Do I see some build out in the U.S.? Sure, but I don't think it's going to take a lot of away. It's still LNG. Asia, there's a lot of demand in that region for it. And, even in Europe, growth is going to slow for LNG demand because it rose so much a couple of years ago. But it's still going to flow there. They need it. If you think about it, we've had 2 warm winters. They may lose some more gas from Russia. They're going to continue to rely on LNG. But Asia is the primary growth market.
Patricio, I want to swing back around to you and get your perspective on this idea that we've seen a big curtailment of Russian gas flows into Europe, and which I think is something that the policymakers and the political types have been pushing for. But my sense is that Russian LNG is actually an important piece of the overall picture. So can you frame that for us? And isn't it a bit ironic if the pipelines are shut off, but Russian LNG is coming into Europe? And what's the political discussion around that?
So yeah, that's a soft spot, I would say, for for the political clout here in Europe in general. Everyone's sort of flagging that. We've curtailed, or Russia has curtailed, roughly 80% of the capacity of the pipe flows it used to receive prior to the war. But at the same time, LNG imports from Russia have actually increased to around almost 20 billion cubic meters per annum, which is almost double what it did a couple of years ago. And the main importers are still mainly Spain and parts of Belgium. But that, I think that is just the calculus of not reducing our supply base too soon. I think in general, the expectation or the consensus view is that global LNG supply will sort of take a step change by the mid-decade, 2025, 2026. The supply pool will actually widen not significantly, but considerably more than it has so in the past few years. So I think, the Europe regulators will not want to restrain our options before that happens. I think the market looks looser than what the risks than what the risks it faces are. So there's still geopolitical risks, supply disruptions. Storage is still very high now, like Talon said, but there can be cold spells. There is sort of an underlying frailty to the balance still, and I think perhaps after 2025, when all the projects that Talon mentioned actually come online and we actually see that growth materialize, I think, yeah, there will be a bit more willingness to be more forceful on the sanctions. So far, there's the pipeline agreement, the transit agreement that allows for Russian gas to pass through Ukraine is set to expire by the end of 2024. We think there's a very, very big chance that it won't be renewed. It would make sense not to renew it. But so far, we've actually heard commentary from the Russian side, energy minister, saying that they would like to keep it flowing. So it's kind of a don't cut it if you don't need to cut it kind of situation. So it's kind of in the limbo right now. We only see most of the sort of supply side risks we see are from the conflict in the Middle East, which so far is lengthening the trips that Qatar LNG from Qatar needs to take, which adds maybe 2 weeks to the transit and obviously increases the cost. But so far, traders are sort of shrugging off the risks because European gas is very much to the downside at the moment. It's at around 30 euros per megawatt hour. And it seems like traders are already thinking of next winter, just because futures until March are very much flat. But that doesn't mean that if these geopolitical threats extend, escalate, or really just seeing them prolong throughout the summer, that is definitely going to tighten the market again.
Just curious, is there I believe the answer is yes, but what is the import cost via pipeline versus LNG? Is order of magnitude different? I mean, in theory, pipeline should be a way more efficient way to bring the molecules and resources in, right? Can you give us a sense of what the differential looks like?
Well, without going into breaking out the cost base itself, I think it's fair to say that if you look at what the average TTF price was before the war, so we're talking about 2015 to 2019, 2020, the average for gas was between 15 and 20 euros per megawatt hour. Obviously, if you look into what it's been doing in 2023, when LNG became the dominant source, when LNG effectively replaced Russian piped gas as the main source of gas, yes, that will give you the mark of around 40 euros per megawatt hour. That was the average, between 40 and 45 throughout 2023. So I think that gives you an idea of the landing costs. Of course, if you were to break it down and actually take into account the shipping costs, the liquefaction costs, the regasification costs, we did sort of a ballpark number of this figure, and it landed us around 18 to 20 euros per megawatt hour. So it's still significantly more expensive if you translate that into dollars per MBTU. It's still almost three times as much as what gas costs in the US.
Talon, I want to swing back around to you and get a sense of who do the benefits of the LNG exports from the US accrue to? So if you look, Henry Hub is about $2 per MMBTU at the moment, and Patricio is talking about much higher landed costs in Europe, and I think the same type of pricing dynamics works globally. So, which companies are really able to sort of capture the price differential for buying gas at 2 and selling it at a much higher price in either Europe or Asia?
Yeah, the first company that comes to mind is Cheniere. Some of the other exporters, it's more of a tolling arrangement, but Sempra, Kinder Morgan has a small project, some private companies. But yeah, Cheniere really capitalized in 2022 and 2023. The margins were massive. The cash flow was large. But that's slowing down because the reality is about 90% or so of US LNG capacity is backed by long-term contract. And Cheniere's EBITDA and cash flow, it's going to decline. It declined last year. It's going to decline again this year. More of their capacity is long-term contract now. They have less exposure to the spot market, and also spot prices have come down significantly. But the past couple of years, those are the companies that really benefited.
Okay, very interesting. We actually have a question from the chat, which I'm going to bring up here. And the question is, how much of the EU reduction in natural gas use is due to the, damage to the industrial base? I think versus renewables. So I think industrials have been hit pretty hard. But Patricio, can you kind of give some high-level framing on what's going on there?
Yeah, sure. So by far the subsector that has been hit the most, or by the biggest amount of demand destruction, has been this industrial sector, primarily in Germany. So despite the sort of relatively subdued recovery in demand for heating and sort of flatlining demand for power generation in 2023, we've seen industrial use for gas in Europe in 2023 remain 20% below the 5-year norm. So after the war, after the sort of the spike in costs, industrial demand, particularly in Germany, which is the industrial hub for the region, dropped around 18% in 2022 and remained at those levels, has remained roughly at those levels throughout 2023. And we don't see any prospects of it significantly recovering over the next at least couple of years, just because of a sort of bleak global economic outlook, and also because there is really no offset to the need to import LNG, and as you just mentioned, LNG is pricier than gas in the US, mainly because we cannot produce it in-house or cannot produce enough of it. So we're kind of victims of always having to pull on cargoes from portfolio players like BP and Shell, because we don't have those long-term contracts. So in that sense, it's kind of, we're in this phase of structurally higher energy prices because we're not a net producer of energy. So yeah, that's sort of the outlook. It's the industrial side of things that took the brunt of the hit, followed by weather. So like Talon mentioned in the beginning, we did have a relatively mild, very mild actually. Last winter was very mild, was one of the mildest winters in Europe in 20 years. This winter, half of it was mild as well. We've had a cold spell in January, but overall this is comparatively still a mild winter. So things could come back from that front. And on the power sector demand flatlined in 2022 despite everything, just because we really needed to burn gas despite the increase in cost, because there was a shortfall in hydropower output and a shortfall in nuclear power output. So it was kind of a convolution of many things in 2022. But from 2023 onwards, we've seen a robust recovery in baseload power sources that have curtailed demand for gas and power, and we expect that to steadily decrease as wind and solar take up a bigger chunk of the grid, and also decentralized energy systems.
Talon, I'm curious, if Patricio is right, and we kind of really see a sort of structural slowdown, decline on gas use in Europe, this really suggests that a lot of the growth narrative that you're describing is being driven probably in Asia. So can you frame, what is the driver of the growth, and are we entering a world where, maybe China's going to use less coal and substitute for gas, or kind of what are the dynamics? What's driving it when you look outside of Europe?
Yeah, so Pat's right, where European industrial gas demand is down, and overall gas demand, but LNG is a portion of that may, stay high or even grow a little bit, depending on the weather, right? We've been lucky this current winter, the last winter. If they have a severe winter, that changes the landscape completely for that given season, right? So it'll be interesting to see how that unfolds. And, European companies haven't really signed that many contracts. It is the portfolio players, which can sell to Asia, they can sell to Europe. Europe's kind of hedging their bets with the energy transition there. But yeah, the main growth is in Asia, right? So you have China. China regained its spot as the top importer last year. And that's even with they're getting more pipeline gas from countries like Russia, they're producing more gas domestically, but they're also importing more LNG. The one interesting thing about China is they're becoming more of a portfolio player themselves, where they've been reselling cargoes the past couple of years, which they haven't done before that. But they have several contracts coming that are going to start in the next several years. So we expect, LNG demand growth to rise in China. But it's other developing nations, right? Thailand has had issues with domestic gas production. They've imported a lot more LNG. Places like Singapore, Indonesia, they're going to import more. And then you have other countries, Philippines, Vietnam, they just started importing LNG. So there's a lot of developing nations. And I didn't even touch on India, right? There's another group, India, Bangladesh, and Pakistan, where they're more price sensitive. They've kind of been priced out of the market the last couple of years, where that's the thing with prices coming down, there may be a floor put under it at some point, because the lower prices are going to spark some demand, which we've seen in countries like India. So we expect demand there to grow. They're building more import capacity and plan to use more gas. So the hope is that gas displaces more coal in those countries. I don't know exactly what the pace will be, but that's also something that the Biden administration has to consider, right? When they review these approvals and climate emissions, you have to factor in, number one, the US's reputation as a reliable provider. And then you have to factor in the benefits of coal to gas switching and what your allies need. Because if they don't get gas from the US, they're just going to go elsewhere.
Couldn't agree more. And it's very interesting to note that, gas has been a very important contributor to the U.S. decline in emissions as it's helped to displace coal. Renewables are also a key part of the story. For anyone who's missed it, solar installations last year absolutely soared. The final year-end tally's not in yet, but the initial assessments suggest that solar installations grew 76% last year. So if you think gas is growing fast, just look at what solar is doing. We see strong double-digit growth continuing this year. On the wind side of the equation, we're probably going to do more than the 110 gigawatts of installations this year. So continuing to see momentum there. So I personally think that renewables are sort of the friends of natural gas, right? Because as Patricio has already pointed out, that these new sources are intermittent, and gas is sort of the most reliable sort of type of technology and fuel mix to sort of slot in there. But maybe a sort of interesting strategic question for both of you would be, I saw a headline just yesterday that ties back to policy, and so we've got this LNG permitting pause that the Biden administration has done. On the same time, they are offering a $1.5 billion loan to restart an existing or a retired nuclear power plant in Michigan, I believe. And so, Patricia, I want to come to you first. Germany took a lot of nuclear capacity off the table, and I'm sure that has made getting through this gas crisis much more difficult. Is there any discussion in Germany yet of doing what the Biden administration is proposing relative to nuclear over there in Europe?
No. So to my personal disappointment, no. There hasn't been any political willingness to halt the decommissioning of the last nuclear plant in Germany, which took place in April of last year, and as far as we know, it's ongoing. The decommissioning, the defueling of the last plant in Germany. And yeah, like you pointed out, that meant that during 2022's gas crisis, Germany was burning more gas and more coal when it was absolutely the most expensive source. So yeah, absolutely. From that point of view, it's a blunder. I'd say it's sort of one of the most reliable sources of power, although the economics are quite questionable. I would say if you look at like recent headlines about the build out here in the UK with Hinkley Point again delayed by another 4 years and adding 8 billion on top of the initial, not on top of the initial, on top of the latest estimate. It will take the building of this plant over 35 billion pounds. So that takes the levelized cost of electricity way above 250 pounds per megawatt when you compare to wind and solar that are doing maybe 30 to 50 euros or 50 pounds per megawatt. So and obviously these plants tend to be very much always delayed. That's not a track record that is only that we see here in the UK. We've seen it in France. There's also concerns that they will not be able to build the reactor that was supposed to come online in 2024. So this year sort of puts into question the whole build out for France, who has claimed it can build 6 new reactors until 2035. So yeah, I would say from theoretically, yeah, nuclear power is great. It's stable, reliable, low emission, but the economics are quite challenging. You would always need some sort of combination between public and private investment because the build out times are so long, and also tend to include cost overruns.
35 billion pounds for a single power plant is a stunning amount of money. I would imagine very few companies have the balance sheet capacity to make an investment of that nature. Talon, coming back to you just on the policy front. We've got the LNG pause, maybe some money for nuclear. And we are in an election year, and so I think we're going to see a lot of sort of public discussion on these kinds of topics. And I'm curious for you, even just setting aside which way the election goes, do you think any of this really matters? Like who wins in November? Is it mostly rhetoric, or could the U.S. like really be looking towards a pretty different type of energy paradigm if a Republican wins versus a Democrat winning?
The energy sector's performed pretty well the past few years, right? So a lot of it is rhetoric. I mean, it still makes a difference. Just the LNG pause, for example, right, where I spoke earlier and said, if the Republican nominee is elected right around inauguration, I would imagine it's reversed and things continue as normal. Whereas the other way around, it may be extended a little bit more. But overall, we've seen a lot of LNG growth. One thing to highlight was the moratorium on drilling on federal lands that Biden enacted when he was first elected, and it amounted to a delay. It didn't exactly amount to a whole lot, just a delay in permits. So there is a lot of rhetoric involved. I don't think it's black and white that one side gets elected and energy fossil fuel investments rise and things like that. It's it could be just more politicking, right? So it's in terms of oil and gas production, it's still, these E&Ps are very disciplined with their capital. It's flat growth, low growth, and that's kind of what we see. And it's a matter of how much the LNG build out, takes some of that demand. But prices have to reach a certain point, right? So if LNG, these plants come on, and there's a huge influx of demand for that gas, prices have to hit a certain level to, spark the E&Ps to produce that. But overall, to answer your question, I think it's a lot of it's rhetoric.
One last question, though, perhaps on that front, and maybe it aligns with what you just said. And I may not be pulling up all of the right names, but I'm just ticking through some of the tickers that have either gas or LNG exposure, and it doesn't look like any of them really responded, negative or positive to the announcement. Is that the right assessment? And why did the market shrug off the news? Because it does look like the market just didn't even care about the headline about what the Biden administration's doing.
Yeah, because it's a 3 to 4 year process, right? It doesn't affect gas production or LNG exports until 2028, really. For when you have a LNG project, it takes about 4 years to build. And, from when you start construction to shipping first LNG. it's a long process. So that's why, I mean, the market's pretty much set for the next 3 or 4 years.
I love that idea. And what's fascinating about that is I think we saw some pretty similar reaction to a lot of really negative headlines on the offshore wind industry last year. If you were following, there were some really high profile cancellations of offshore wind projects. But if you look at a lot of the wind exposed names, they didn't necessarily move that much on the news. We'll set Ørsted aside, Patricio, but just for on some of the equipment suppliers, and part of the rationale, or sort of I think why it didn't move, is because these are really long lead time projects. So yeah, you cancel a project that wasn't going to happen until later this decade or even in the 2030s anyway. Well, the sort of near term implication is quite limited. So I think that's a very interesting place to leave it. So for anyone who's listening, or if you're new to these discussions, we hold these calls weekly at 10 a.m. New York, 3 p.m. London. We really thank you for joining. All of the topics we've been discussing, we have research on, so make sure you look up Patricio or Talon, run a bio on their name. You can set up an alert and get the analysis that they write pushed to you on the terminal. And again, just one last invitation. If you are interested in joining us in Miami in a couple weeks, just reach out and we're happy to get you the details on that. And stay tuned, because we'll be holding more in-person events in London later this year, in New York later this year. And we want to make sure that we're not just faces on a screen, that we have an opportunity to meet and say hello to you in person as well. So again, thank you for your time, and we look forward to hearing from you.